All right, and with us right now, we have Mark Moss. Mark, you're the co-founder of Signal Profits, but more importantly, I think for this is you're an educator. You're I would say you've got quite a big following on YouTube, and you teach wealth creation, and primarily you do that around cryptocurrency, which is kind of a scary term. And what I really wanted to do, you're such a great educator, and you bring this down. You speak in terms, I think, that people feel comfortable and that can understand these concepts. But I just want to say thank you so much for spending some time with us. And hopefully, for those of us who have kind of heard these terms and we've been curious, but it sounds scary and it sounds way too geeky, or it sounds like it's something, only that, maybe that rich nerds are doing. That's not the case. And right. So thank you so much for making this so accessible for people.
Yeah, Josh, thanks so much. It's my pleasure. I mean, I love to share information. I believe that, education, knowledge is the key, really, and in all areas of our life. And there's a big piece missing around the financial education piece. And so really that's been kind of my mission is to bring more education there.
I love it. I love it. So if we could start off with just some basic definitions. And so there's three terms that I hear a lot, and they're kind of all thrown around, sometimes interchangeably. But those terms I hear a lot are Bitcoin, crypto, and blockchain, which again, all sound really kind of like something from the Matrix. Yeah. I think for a lot of us, but can you kind of just explain those in very simple terms?
Yeah, I'm gonna explain it very simply. First off, I would just say there's a quote that I always love to say, and that's principles are few, methods are many. There's only a few core basic principles in life, and there's 1,000 ways to apply them, right? So whether we're investing into real estate or stocks or bonds or your business or private equity or something scary like cryptocurrency, investing principles are investing principles.
Yeah.
How we choose to apply those principles vary, right? So I would just start with that because it doesn't have to be as big and scary. A lot of this people may already know just even intuitively. The second thing that I would say is that, especially with new technology, we don't always have to understand everything. Can you tell me exactly how your light comes on when you flick that switch?
Not at all.
You use the internet every single day. Can you tell me exactly how this video from me to you is getting there?
Yeah, no, sorcery.
But you use it.
Yes.
And you might have bought stock in an internet company, and you probably bought Microsoft product, right? So we don't have to understand the technical aspects to use a product or make money from that product. So that being said, but to jump in a little bit to answer your question, so Bitcoin is the spirit, tip of the spear. It's what's kind of famously known. It's been around for about 10 years now, and Bitcoin was designed to be like a new form of currency. I don't want to use the word money, but a new form of currency, and it's meant to be used peer to peer, and that means person to person, and so.
Sorry, I just had to shut a door. I heard some kids coming home. Mark, do you want to start? Let's start, and we'll just edit this together.
Yeah,
and
I figured you were.
Go right into to answer your question, and then go into the Bitcoin thing. Sorry about that.
Yeah, no problem. Yeah, and so to answer your question specifically about Bitcoin, cryptocurrencies, and so forth, from a high level perspective, Bitcoin is the tip of the spear. It's the one that's kind of more famously known. It's been around for about 10 years, and it was designed as a direct response to the banking collapse in 2008. So it launched in 2009, and it was to be a new form of currency. It was a peer to peer. So that means person to person. So right now you have like a Venmo app or a PayPal app, and I have a Venmo or PayPal app, and I can send money from my Venmo to yours or my PayPal to yours. And that may seem like it's peer-to-peer, but it's not. So my PayPal app then goes to my credit card, and then my credit card then goes to my bank, and then my bank then goes to your bank, and then your bank goes to your PayPal. Mm-hmm. So it had to go through like 5 or 6 gatekeepers, or we call them rent seekers, in between you and I. Now, there's a couple problems with that. One, it's extremely inefficient. It's expensive. Each one of those wants to extract rent or a toll. And then the bigger problem, people don't really see it in the United States, but this is a global movement. But then the problem is, what if PayPal doesn't want me to send you money? What if PayPal blocks me or prevents me or stops me? What if a government wants to seize or steal or manipulate my money? And so we have these 6 gatekeepers in between you and I. And why can't I just give you money directly like we do with cash?
Mm-hmm.
Well, there's been a lot of reasons why, and mainly it's been a technology problem. With a digital money, how do you prevent double spending and things like that, right? Like if you give me a file on my computer, I can copy that file over and over. So we had a technological problem, and so that was solved with Bitcoin. So now Bitcoin gives us a way to exchange money back and forth directly peer-to-peer without any what we call third-party central administrators.
Mm-hmm.
All right. Now, I want to just talk about this for 1 second because this is revolutionary. So again, if you're watching from the United States, maybe you don't get this, but this is a global movement, and you have to understand why. So I don't like to talk about what, I like to talk about why.
Yeah.
So we have a problem with what we consider money. Money is controlled by central banks. Central banks produce as much money as they want. When an asset is duplicated and create more of, that it's called inflating the asset, right? You hear about inflation all the time. When you inflate it, it loses value. So the median home price, in the 1950s was $50,000. Today it's $250,000. The price of the house didn't get more expensive. The dollars that it takes to buy it became worth less.
Yeah, right.
And so they're manipulating the money. And then when they printed, so just in the last couple of years, the U.S. government's printed $4 trillion. But you didn't get any of that money. I didn't get any money. Where'd it go? Went to the bankers, right? So now they're getting money. Then they buy our assets. It gets into all these things, and I don't want to get into that. But in other countries, like in Cyprus, for example, a couple of years ago, the government went bankrupt, and the government just took half of everybody's bank account. In Venezuela right now, the currency's been losing value so fast that, a stack this big used to buy a loaf of bread, and today a wheelbarrow won't even buy a loaf of bread. And so those people have to leave their currency and go into something else like gold or like Bitcoin. In Zimbabwe, they're leaving their fiat currencies. They're going into Bitcoin, right? So it's another form of money that allows us to go peer to peer without people in the middle, without being able to control us. And it's not just money, it's also information. So like I have young kids, and the stuff they learn in school is not the same stuff that I learned in school. History gets rewritten. History's rewritten by the victors, right? And so using technology like Bitcoin, we can secure value. And when I say value, things of value. So not just money, but like intellectual property, things like that. And we can secure those in the blockchain, and they can never, ever be manipulated or changed or deleted or any of that. So that's the revolution. And so we've never had an opportunity in the history of mankind to be able to hold value that can't be seized, stolen, manipulated. And if I want to transfer it to somebody else, it can't be stopped, blocked, or prevented.
Yeah.
So we've never had this in the history of the world. So it's a brand new technology. And so Bitcoin is the digital money. The technology that it's built on is called blockchain. Okay. And the reason why it's important to understand that is because it's much bigger than just a peer-to-peer money. So if we look at like what is technology, we look at like the internet. The internet is a new technology. The internet technology allows me to upload a file and download a file. It allows us to share information, right? So before the internet, I had to mail you a letter. Today, I can share the information online. I can upload videos to Facebook. You can download a video from Facebook. So we share information. Now, how we use that technology is always different, right? So Uber is using internet technology for me to find a ride, and Google is using internet technology for me to search for a search engine, and Zillow is allowing me to use that technology to find a house. But Zillow, Facebook, and Uber have nothing to do with each other than they're all built using a technology called the internet. Okay, so that's how we really break that down. The thing with the internet is that there's no trust. And so I don't know you, you don't know me, and it's kind of like that movie with like a drug deal where it's like, give me the cash, no, give me the package, and we don't trust each other. So everything with the internet requires third-party central administrators. So again, back to the PayPal example, or Facebook is a third-party central administrator, Twitter is a third-party administrator, and even Uber, there's a company that sits between the driver and the rider because there's no trust. So it's like an escrow service, if you will. And this is what the blockchain technology has solved. This is the difference. So if the internet allows us to share information, blockchain technology allows us to share value. So that means I can share a smart contract, a contract that has like data logic, like if this happens, then this happens. So I don't need escrow. It allows me to share intellectual property. It allows me to secure land title records in a blockchain that can't be, and it allows me to change money. So it allows me to transfer value and not just information. Does that make sense?
Yeah. So blockchain is basically like Uber for whatever it is you use the platform for.
No. Uber uses a technology, right? Mm-hmm. Uber's considered an internet company. They use a technology. In order to use Uber, you have to have internet access.
Right.
They use a technology called internet.
Yeah.
Google uses a technology called internet. In order to use Google, you have to have internet access.
Okay.
So internet is the technology. The applications, Uber's an application of the technology, Google's an application of the technology, Facebook is an application of the technology, but all three of those applications have nothing to do with each other. They're as different as can be. The only common denominator is they use a brand new technology.
Okay.
And so we have a brand new technology called blockchain, and it allows us to transfer value, and Bitcoin is an application of the blockchain technology. Okay. But there's thousands of applications of the technology, just like there are millions of applications of internet technology.
Yeah. So Uber is to the internet what Bitcoin is to blockchain then.
Yeah, that's a great way to look at it.
Okay. And I think the final term, cryptocurrency. So am I right? So Bitcoin is a cryptocurrency that uses the technology of blockchain.
Right. So what happens is first of all, that word cryptocurrency is two things. So one, it's cryptography. So cryptocurrencies or blockchain technology uses cryptography, which is encryption. Mm-hmm. So and up until the 70s, it was illegal to use encryption, and it's still borderline illegal. Governments don't like you using encryption because they want to be able to see everything.
Yeah.
So it uses encryption. That way, nobody can seize it, steal it, manipulate it. Right. So it uses encryption, that's cryptography, and then currency, obviously it's being used as like a money. Overall, I believe that word is a little bit misleading because all these other blockchain companies are not meant to be currencies. And I'll just give you a couple quick examples. So for example, there's a company called StorageCoin. Now, we know that like data hacking is like a massive problem today, right? We know Experian was hacked. It was the largest data breach in history. We know that the NSA, the United States NSA, was hacked, and when they hacked the NSA, they stole their hacking software. And now they're using that hacking software to hack everybody. These data hacks are out of control, and it makes sense, right? If I had $1 billion in a bank, a lot of people are going to want to break into that bank. But what if I could have 1 billion banks with only $1 each? Nobody would bother. And of course, with data, that's not been possible, but there's a brand new technology, and it's called blockchain. Yeah. And this brand new technology called blockchain allows us to decentralize data. And instead of putting all the data in Experian servers, I can break it apart and put it across 1 million servers across the world with this brand new technology. And what data hacker would ever hack into 1 million places to get one piece of data? They wouldn't. And so this data hacking problem has never had a solution until now. There's a brand new technology. But in order to use that company called StorageCoin, I can participate. I can put a computer on the network, and I get paid with their native token. And it's called a storage coin. Mm-hmm. Generally, that would be called a cryptocurrency, but it's not meant to be money, right? It's meant to be like, if I went to Chuck E. Cheese, I have to buy tokens to play their games. And in order to be on the storage coin network, I have to use their token. Mm-hmm. That make sense?
Yeah. So, so I want to talk about like how someone gets started, but I think before I get into that, it's like, why should the average person who's like, I don't know, man, like I go to work, I get my paycheck, go to the movies, go out to eat. Why should I care about cryptocurrency? Well,
there's a few different reasons. So first of all, if you like to make money, there'd be a reason to do that, right? So, I'm going to come back to that one. The second reason would be if you like freedom, you like privacy, You don't like how our money's been manipulated and basically your money's losing value every day.
Right.
If you don't like, especially if you're in other countries where these regimes, like in Venezuela, where your money is leaving, that's a big reason why you'd care about Bitcoin. But let's say you're in the United States and you live in this little like bubble and you don't care about any of that, but you want to make money. So this gets into the bigger picture, which is, we can work really hard and we can be really smart and we can make good money. We might even get rich. We might even make millions or tens of millions of dollars. But to get really wealthy, it requires some luck. And what the luck is timing. So where real wealth is generated is around what we call these wealth cycles. Or they're wealth transfer cycles. So there's certain periods of time that we get to where wealth transfers from one group of people to another. And it typically happens either one through massive economy crashes, but it also happens through new technologies. So over the last 200 years, there's been only 5 technological revolutions: steam engines in the 1700s, railroads, automobiles in the 1900s, the telecommunication age that started like in the 70s and 80s, and now today with blockchain. And each one of these technological revolutions created wealth for an entirely new set of people. So the people that got rich in railroads were not the same people that got rich in automobiles. The people that got rich in automobiles, like Henry Ford, were not the same people that got rich in the internet age. Jeff Bezos, right? And the people that got rich in the internet age are not the same people that are going to get rich in the blockchain age. So every time we have a new technology, a new technological revolution, a new tech cycle, it creates enormous wealth. There's this enormous wealth transfer. And so for the average person who doesn't want to just put their money into their 401k every month and hopefully make 5 or 6% over 30 years, if you're looking to make extra returns, a wealth transfer during like a tech cycle is your best opportunity to do that.
So that's a pretty bold statement to say, of the tech cycles that you've mentioned, and those are some really big revolutions. So, again, saying that crypto is this next tech revolution, that's a big statement.
It is, but it's factual. So, it's a deep subject that's hard to understand. I've put a whole, I think a 9 or 10 page guide together that really breaks it down and makes it easy to understand. It's color coded, and I think you'll probably make that available. But to kind of go through that pretty quickly, what happens is every technology cycle builds on the one from the past, and it takes value away from that. So, for example, cars created a lot of value, right? Henry Ford was worth like $160 million at that time, which in 1900 was a lot of money. The telephone came along and it took value from the automobile because now people didn't have to drive as much. They can just hop on the phone. Right? Then TVs came and that created a lot of value. And then VCRs came, which adopted faster because they could just go right on top of the TV, but it took value away from the TV operators because now I could just watch videotapes. Then the internet came along and it scaled faster because it used the telephone lines, but then it took value away. Now I don't need a telephone. I can just use VoIP. So each technology cycle gets bigger and bigger and creates more and more value because it takes all the value from the previous cycle. So the internet also took value from the automobile industry. I don't even need to drive to work anymore. Now I can just video conference right in. Right. So now it's taking value from the automobile industry. It's taking value from the telephone industry. So every technology cycle gets bigger than the past. So we know just from studying technology and studying history, we know that each new technology is worth more, and for that reason. But we also know that, traveling by horseback was slow. So getting there a little bit faster from a car was more valuable. It wasn't life-changing difference, but it was more valuable. So it creates more value. And being able to use the phone creates more value. It's more convenient, right? But what the internet technology does is, as I said, it allows us to share information. And information is valuable. Information is super valuable, right? But now blockchain technology allows us to actually share real value, share money, share intellectual property, share smart contracts, which is way more valuable than just information by itself. So that's why it's going to accrue more value. So even at the dot-com boom, went up in 2000, it crashed off a cliff. At the height of 2000, before it crashed, the market was valued at about $8 trillion. Today it's, hundreds of trillions. So, well, not hundreds, but tens of trillions. But the blockchain space will be bigger because it's going to pull value from that, and it's sharing valuable stuff, not just information. And so today it sits at about 100 billion. And just to get back to the dot-com bubble before it crashed, it would be 8 trillion. So imagine going from 100 billion to 8 trillion, right? That's almost a 10x return just alone on that.
Oh. So speaking of that, I think a lot of people heard that last year Bitcoin crashed. Can you kind of explain what that means and how does that impact cryptocurrency as a whole and the legitimacy of the platform? Because again, I think there's, if you're only just paying attention to news headlines, you probably just hear that and go, oh, well, all my friends that keep talking about crypto on Facebook or social media or whatever, I don't hear them bragging so much because the Bitcoin market isn't going up, 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 up. Something happened. Can you kind of give us kind of explain what happened and what that means?
So I'll go back to what I opened up with, which was what I said, principles are few, methods are many. Mm-hmm. And so it depends on how you're looking at the market. So we know that one of the key principles in life is having long-term perspective. If you want to make healthy decisions today, you have to have a long-term perspective to be old and healthy, right? If I want to make the right business decisions today, I have to know that in 5 years, I want my business to be like this. And so the reason why I say that is when you're talking about Bitcoin, it has been not just the best, but like 1,000 times better than any other investment in the world over the last 10 years, 5 years, 3 years, 2 years. Best investment in the world. Now, if you look at the last 12 months, it hasn't been good. Mm-hmm. So what time perspective are you looking at? What time period? So you could look at any market and go, well, if I look at just this little period, it's been really good or it's been really bad, right? You can paint the picture. But if you look at 2 years, 3 years, 5 years, 8 years, 10 years, it's been the best investment that there has been. So yes, you're right. The last year has been bad. The other thing that I'd say, so then what happens is people aren't understanding what they're doing. And this is why understanding how these tech cycles work is so important, because all of those 5 tech cycles I've mentioned, they all follow like the same pattern. There's like 4 phases of a technology pattern, cycle adoption. And so if you understand that, then you know where we are in the cycle and you know how to invest. So what happens is, yes, the prices come down over the last year. What I would say is that all markets have cycles, stock markets, bond markets, everything goes up and down, right? Nothing goes in a straight line. And so they're all going up and down. And obviously right now we're in a down market, but every down cycle we've had has been higher than the last. So last year's low was 3,600 or something like that. The low from the year before was 1,700. Mm-hmm. The low from the year before was 200. So yes, we crashed, but we ended up more than double the low from the previous year. Does that make sense?
Yeah.
So
yeah, for sure.
If you happen to buy right at the top before it dropped, you're down. But if you bought stocks right in 2008, you were down by 2009 too. And if you bought Amazon in 2000 for $80, by 2001 you were down to $5. Now it hit 2000 a few months ago. You see what I'm saying? So yes, it's down in the last year, but when you look at it over a long period of time, it's way up. It's the low of last year was more than double the low from the year before. So if you've owned it for more than a year and a half, 2 years, you're still up on your investment.
Yeah.
The other thing is really, it's not about like who buys any investment trying to make money in a year. Like you're putting money into your 401k to retire in a year. No, you're going to put money into that for 20 or 30 years.
That's right.
And so as investors, you're going to buy a piece of real estate and you're going to own it for 1 year and hope that you're going to retire off of that? No, you're going to own that piece of real estate for 30 years. They're going to pay your mortgage off for you, right? So we should know that investing is a long-term game. And what happens is in early stages of technology cycles, this is what always happens.
Yep.
In early stages of technology cycles, only the few inventors know about it. So you just have like nerds in their garage, hobbyists and tinkers. And then a few people start hearing about it and then it attracts some money. And what happens is the money runs ahead of the technology. Yes, the technology is there. Yes, the technology is probably going to change the world. But so much money comes in that it chases it up, but the technology is not there. It's not ready for adoption. It's not ready to be used. And so then reality catches up and then it crashes. Boom. So then it crashes down. So now, but the reality is as improved. So now today, the reality is it's way further along than it was a year ago, but perception of it is here today. Now, eventually perception will catch up. It's going to overcorrect and get above, and then it's going to come back down. And perception will continue to do this, if that makes sense, right?
Yeah, it's like, well, real estate in Florida, for example. We were here when the market completely crashed, and but in terms of like home value, it would have been foolish to say, oh, that's it, real estate doesn't work. I shouldn't be paying attention to real estate. No, you should be paying attention to markets and the fluctuations. And so, crypto's it's volatile, though, right?
Well, So what I would say just real quickly, I want to add is that it's investing into a new technology is completely different than investing into real estate. Just like investing into real estate is completely different than investing into stocks. To invest into real estate, it's a completely different thing than it is to go invest into stocks, which is a completely different thing than it is to go invest into Forex, like foreign exchanges, which is a completely different thing than it is to go invest into gold and silver. Everything has its own intricacies and its own strategies. So if you're going to invest into a new technology, it's kind of like venture capital. It's super risky, which is why you can make huge returns, but you're going to pay risk. You could wait 10 years until all the risk is gone, but then your returns are going to be small. So it's all about risk and reward. So if you understand how technology cycles work and then you use the correct strategy, you can do really good with it.
And so, Mark, I should say that for someone who's listening to us, I want to lead people to a few resources that you've put together. And so, first off, if you go to savingsangel.com/wealth, Mark, you had mentioned a guide, and it is really, really good. I actually watched, I went through this and then watched a video around it as well. It's how understanding tech cycles can make you rich. So if what Mark is talking about, you're like, okay, this guy clearly knows what he's talking about. You put together this guide, and it's about 9 pages long, very attractive, very easy to understand. And you can so you can download that right now. It's at savingsangel.com/wealth. And then also, Mark, I think someone who wants to learn more from you, how we connected, and I've been watching your videos, which is why I thought, gosh, if there's anyone who can help explain this to my audience, you can. So if when you're on YouTube, you can go to Market Disruptors, and that's your YouTube channel.
Yep.
And so you have a lot of subscribers. You put together great videos that explain this very, very simply. And I think that this is important. And I think that, maybe if I could have you put on your if you're willing to, put on your prognosticator hat. And so where we are right now, for those who understand this and find a way to involve themselves or take advantage of the technology, what kind of an advantage would we be at, or that person be at, than say someone who ignores it for another 10, 20 years?
Sure. Well, today people are buying Amazon and Apple stock, right? People are buying it and selling it right now, this very second. We know that a few months ago, Amazon stock hit $2,000. Today it's down. I don't know what it's at today, 1,600 or whatever. But we know that in 2001, it was at $5. So it had gone public in 97 for $1. It went to $80 by 2000, and all those people bought it at 80, and then it dropped all the way to 5. And all those people said, what the heck? I just bought it for 80. It's supposed to change the world. Everyone's going to do all this online shopping, and online shopping is going to be this big thing and all this stuff. Well, guess what? In 2000, you couldn't even use online shopping. We had something called dial-up. It was so slow, you couldn't even use the internet. There was no online shopping happening, but people bought Amazon stock because it was going to eventually be there. So all those people sold at $5. They're like, oh, what the heck? I'll at least get a couple bucks out. But then it hit 2000. So what advantage do people have of getting in now versus getting in 20 years? Well, you could buy Amazon today, and maybe it goes from 1,500 to 1,800, and you make a few percent there. But what if you had bought it in 2000 at $5? right? So that's the difference, right? So that's being an early adopter, being a visionary, seeing, massive potential opportunity gives you that advantage. And like I said earlier, right, it's like it's volatile now. It's risky because it's so new, but that's why you get huge returns, right? So you can wait later and buy Amazon today when the risk is gone, but you're just not going to make those returns. And so because it is risky, it's definitely not something that you want to go all in on. It's something that you want to have exposure to. So maybe 10%, 20% of your portfolio, 5%, 2%, whatever is into crypto. So you have some exposure. But let's say that worst case scenario, it never works out. Well, you're not all in and you don't lose in everything. And that's just not about crypto. You would never go all into real estate. You would never go all into stocks. You would never go all into anything. And so you want to have assets in different areas so that way, whatever happens, you're prepared. But I think you definitely want to have some exposure to this asset class.
Yeah. So how does someone get involved then? If they're like, okay, Mark, like I've got, maybe like $3,000. What can I do with that? And just, buy and hold and invest in some sort of crypto.
So I think, again, right, principles are few. So how would you get into any investment, right? Whether you want to start buying stocks, how are you going to start buying stocks? You're either one, going to use like a financial advisor who's going to do all the research for you and tell you what stocks to buy. Two, you're going to spend a ton of time researching it yourself. Or three, you'll buy some sort of like a financial newsletter that will analyze stocks and tell you what to buy. Those are your options, right? And so this would be no different. If you wanted to get into, some of these crypto assets and get some exposure, you could spend, hundreds of hours trying to figure it out and figure out which best ones there are. There really are no investment. There's really no advisors that would take your money and invest it for you today. There are some funds that you could buy into. Or the third is you could buy a newsletter and you could have someone do all the research for you, put it together and kind of hand deliver it to you. And that's what I do with the gold market. I do that with the oil market. I do that with emerging markets like China because I can't be in all those markets. And so we pay for information. So that's a really good option.
And can you kind of explain exactly what, so obviously you do amazing work as an educator, but you actually provide more help. And can you kind of explain like how Signal Profits works?
Sure. So on my YouTube channel, Market Disruptors, it's 100% education. I like to teach people how to think and not what to think. Like the old adage of teach a man to fish versus giving him a fish. So if you follow me there, I talk about like huge, big level trends that are shaping our investments. And we talk about, the innovation adoption that's happening, and it can really help you with your investing or just even knowing about this asset class. But for those that want additional help, people always, well, what exactly coins are you buying? What's your portfolio? Then I do have a service for that. So if you want, extra attention from me, if you will, then we have a service at Signal Profits, and we have something for the two main ways you would approach any market. One, you could actively trade it. So I'm buying and selling, actively buying and selling. And that's good for people if you have that personality type, if you have the time and you like that. And then we have like an investing side where it's kind of like just I'm going to buy this and I know in 2 or 3 years it's going to be worth a lot of money. And I just want to know which ones I should buy and hold. So we kind of have services for both. And in that, we're basically, you're getting the benefit of, we have a full team that does just 24/7 market research. On the investing side, each month we put out like a 10-page report on like the best company that we think at that time that's in the trend, within the trend, then within the trend. Before you invest in any company, you should do your due diligence on the company. Preferably, you should talk to the management or the owners of the company. So we do that. So you get the research, you get the videos, you get the Q&A. So you get all that, everything that you would need to be informed of the market. And then on the trading side, like I said, if you want to be a trader, each day it's like buy this coin at this price and then sell it when it gets to this price, and then you make a profit that way. So kind of something for everybody. And I think just real quick as an analogy, like if I was in real estate, I could like buy an apartment building or a house and then I own it for 30 years and people pay it off for me and it's worth a lot of money. Or I could like actively fix and flip homes. I could buy a home,
right,
do the renovation on it and sell it. And I could do both. So I could be flipping homes, and then the good ones I keep and I put into a long-term portfolio. So you can trade and invest together, or you can do one or the other. And that's just up to you. And so we have a product and a service for both of those.
And so just to get an idea for, let's say someone that's a part of your VIP program, and I'm not asking you to necessarily sell your program, but like what does it end up looking like for someone, let's say that they started working with you 6 months ago on either strategy, either they're investing or they're actively trading? Like what kind of returns have we seen with crypto assets?
So on the investing side, you're buying and holding for long term. So obviously, when the whole market goes down for a year, you're not going to have good returns over that period, right? So it depends on when you bought. So if you came in at the very peak a year ago, like you're down on your portfolio.
Oh, sure.
If you would have bought, a few months ago, you could be doing pretty good. So again, it takes time frames. That being said, the market changes really quick. It's maturing really quick. So we change our investing thesis. And so we closed out 20 positions to make room for some new ones this year. Of the 20 we just closed out, that was this month in January, 18 of them were in profit. 2 never reached a profit. Of the 18 that reached a profit, the average return was over 2,000%. So
wait a minute. Okay. Explain that for me. When you say that it was up over 2,000, give me like the time and
yes,
those are crazy numbers, Mark.
Yeah, they are crazy numbers. Some of them were up, only 400 or 500%. One of them was up like 20,000%. But yeah, I mean, 2,000% is amazing. You figure that the stock market has returned about 6 to 8%. Over 30 years. It's obviously done much worse than that. And a lot of times, I think in 2017, it was like the best year in history, and it, got about 10 or 12%. So 2000 is absurd for sure. But it's the price that you pay for the volatility. So right now, I believe we're in like maybe the best buying opportunity besides starting in 2016, we have this chance to reset. It's kind of like I mentioned, Amazon went from $1 to 80 and then down to $5. We're in that $5 trough right now. Like that's where we're at. So to come in and take some long-term positions now would be good. Now, Amazon, when it dropped to 5, it didn't go right back to 80 in a year. It took a few years to get back.
Right.
And then it hit 2,000, right? So I think coming in right now and setting up some long-term positions is going to be proved to be amazing opportunity when looking backwards in a couple years. So that's a long-term perspective, and so that's how that's been recently. On the trading side, that's just actively buying and trading, buying and selling. Typically, all investing is about risk to reward. I want to make sure I have more upside than downside. So trades typically have like a 3-to-1 ratio. There's like a 3% profit with a 10% stop. And I think in the last month, we've closed like 42 out of like 51 trades in profit. So like an 80-90% win ratio, which if you could have a 50% win ratio, you're doing really good.
Yeah. Right.
Yeah, so 50-60% is really good, and we're at a 80-90% win ratio. It's not always like that. We'll have 1 or 2 weeks that are bad, and then another week that's good, a month that's bad, a month that's good. So again, it's still a long-term perspective, but people like to actively do that. They like to be involved, and so there's just strategies for both people. And the Market Disruptors YouTube channel is all education. There's no selling. We never even mentioned sales products, and it's just teaching you how to fish. Some people want to eat while they're learning to fish, and so that's what the products are for. But inside there, in our members area, we also have lots more information. So we're teaching you how to become an investor. We're teaching you how to be a trader, and our hope is that we have the most educated people in the space. We have the most the people that have the best chance of success moving forward in life. And, we gave them fish, but then we also taught them to fish at the same time. And that's our hope. And we have a pretty strong community that is believing in that and is doing it.
Awesome. Well, Mark, you're a good guy. So 2 things for the person who's listening to this or watching this. First, go to savingsangel.com/wealth. Grab the report. It's called Understanding Tech Cycles. It's really, really super valuable. And I think it's really helpful for just kind of setting that establishing that mindset. They'll also get email from you, which is also super helpful. And then as well, I mean, you're welcome to learn about Mark's VIP program. And I think you offer a 14-day trial for $7 if someone wants to get in, play around with the technology and see how it works. So you're welcome to do that. So do that. That's the first thing. And then secondly, go to YouTube and hit subscribe on Market Disruptors. I've been in this space for a long time, and obviously there are a lot of people that want to make a lot of money, and there's nothing wrong with that. But Mark, I always try to find people that are committed to helping make the world a better place and giving. I really love the go-giver philosophy where you give as much value as you possibly can. And, those who want to step out and they want to engage and work with you, people are smart. They'll do that. So I really appreciate your approach and that you've committed so much to giving so much value. So again, those two things, I think for someone who really wants to take that next step, you're going to be in a really, really great position. Any further, Mark, kind of words of advice, just in terms of like mindset or, where we're at in terms of, kind of this wealth cycle, this emerging wealth cycle that's kind of around us, that people should really be mindful over the next few years?
Yeah, a couple things. One, first of all, you're never going to get ahead in life unless you invest. You have to invest in yourself. You need to invest into your business. You need to invest into your investments, right? So working for money for the rest of your life isn't going to get you where you need to go, so you need to invest. I am not a fan of the financial industry. It was created just to take money from us. Yeah. If you go to Wall Street and take a look at those buildings on the most expensive real estate in the world, they all got there because they're charging you fees. Mm-hmm. So I think I would never give my money to anybody, right? I want to manage it on my own. And so I think just invest in yourself, learn some stuff, try and take some control of that, from that perspective, I'd say that. The other thing that I'd say is that the internet technology has changed the world. And it's really just starting. I mean, the iPhone is now 10 years old. The iPhone's 10 years old, and that basically is kind of where the internet kicked off, because it kind of put the internet in the palm of our hand. And really just in the last couple of years, we're starting to see this world changing. And I think over the next couple of years, it's going to be a much different world. The way that we buy and sell stocks is going to be completely different. The way that we manage money is going to be different. Everything's going to happen really quickly. And you want to be in front of that. You want to be a piece of it. That's where this wealth transfer comes in. And so don't get caught sleeping on it. I mean, you could miss the best opportunity in multiple generations. And so, pay attention, realize that the world's changing, harness it, and accept it, and be on the receiving end of the wealth transfer, not the losing end.
Yeah. Well, Mark Moss, you are my official cryptocurrency expert that I go to. Great educator, wealth creator. You've been around for quite some time in terms of creating wealth, and I appreciate that you bring so much background from many other areas of wealth creation, real estate, the markets. I think don't you have also, like, you've invested, like, you're invested in oil and other commodities.
Yeah. I am. Yeah. I consider myself the non-traditional investor. I've been a professional investor for about 20 years. Everything but the stock. I do have some stocks, but, not like 401ks and mutual funds, but I'm always looking for, outside the norm type stuff that can give me better than market returns. So I think they all work together, and it gives you a more rounded picture of everything.
Brilliant. And finally, you're the co-founder of Signal Profits. And again, if you want to take that next step, engage with Mark, just look up Market Disruptors on YouTube, but certainly go to savingsangel.com/wealth, and you can grab that free report on understanding tech cycle. Certainly, please share this episode with someone that that they're curious about what is Bitcoin, what's cryptocurrency, blockchain. Mark, you did a fabulous job in explaining all that. So, Mark, thank you so much for everything that you've done, and I'm going to continue to follow your work, and I'm excited to join all my other Savings Angel friends in connecting with you, finding you on YouTube, and reading that report.
Great. Thanks so much, Josh. I appreciate getting the chance to talk about this. I love talking about it. Maybe you can tell. So anyway, I appreciate it.
Awesome. Thanks, Mark.